September 15, 2008. Wall Street wakes to a shock. Lehman Brothers has filed for bankruptcy. $639 billion in assets vanish overnight. 25,000 employees lose their jobs. Global operations collapse. Markets freeze. Panic spreads worldwide. How could a 158-year-old bank fall completely? This is a story of ambition, leverage, and hubris. Of unchecked power on Wall Street, Henry Lehman arrives in Montgomery, Alabama in 1844. He opens a small dry goods store. His brothers Emmanuel and Meyer join him. By 1850, Lehman Brothers is born. They trade cotton. Cotton becomes their foundation. Over generations, Lehman evolves. It survives depressions and wars. It merges with Kuhn Loeb in 1977. It is acquired by American Express in 1984 and later spins off in 1994. It acquires Salomon Brothers in 1998. By the 2000s, Lehman is global, with Manhattan as its headquarters and with offices globally. 25,000 employees worldwide, a titan of capital markets, and where power drives every decision while ambition fuels every expansion. Lehman thrives on complex finance, capital markets, investment banking, asset management. They bundled home loans into complex investments to sell to others. They finance hedge funds. They run repo operations. Real estate holdings double from $52 billion to $111 billion. They had borrowed over 30 times more money than they actually owned, far above regulatory norms. And yet, all appears stable, until it isn't. Lehman used an accounting trick called Repo 105 to temporarily hide billions in debt from its books. $50 billion vanished temporarily from the books, yet investors and regulators see a healthier bank than exists. Debt, risky assets, opaque funding. Everything depends on faith and rising housing prices. The illusion of power is dangerous. Warnings arrive early. Analysts note soaring debt. Market commentators question mortgage exposure. Internal emails show overextension. Regulators such as the SEC, OCC, and Federal Reserve failed to act decisively. Lehman structures hide risks few understand. Complacency reinforces power. The higher Lehman climbs, the less scrutiny it faces. Then the housing market implodes. Mortgage-backed securities lose billions. Liquidity dries up. Short-term lenders demand collateral. Repo lines freeze. On September 9, 2008, a $2.8 billion loss was reported for quarter 2. Stock plunges. Confidence dies. On September 15, 2008, Lehman filed for bankruptcy. Collapse is instantaneous. Credit markets seize. Banks refuse to lend. Global stock markets crash. Money market funds break the buck. Lehman's fall triggers a domino effect worldwide. No one saw the scale coming. One empire's demise shakes the globe. Lehman's story is more than numbers. It is ambition, trust, and oversight failure. Regulators should impose stricter rules. There should be need for stress testing. Rating agencies should face accountability. One should be cautious of human flaws, such as greed, complacency, and hubris. Lehman Brothers shows power is fragile, and illusions are dangerous.